Morning, I'm Chris Peter, and welcome to Charting the Markets on IG Live. And we continue the focus this week on global inflation. Overnight, Japan's inflation touched 2% year on year, which has raised hopes that the Bank of Japan, or raised expectations, that the Bank of Japan may actually think about raising rates at some point this year, maybe even as soon as next month or even into April when wage negotiations are complete. So that starts us off really on our global tour of inflation. This week, we get US PCE data on Thursday. We get German inflation and Eurozone inflation this week as well. There's plenty to focus on. Not too much in the way of really heavy hitting corporate news. You had Zoom Communications last night delivering the standard response to anything mentioning AI this earnings season, namely a rally in the stock. Seems like companies are trying to jam the phrase AI into everything they can once more just to get that rally. But it duly delivered for Zoom Communications, which has continued to recover from what's been a very rocky post-pandemic period. But overall, a fairly quiet session so far this week. Not too much moving markets across the board. We wait to see whether this inflation data will do anything to start to change that. The Dow had a bit of a mixed session yesterday. US indices, though, saw record highs on Friday, just drifted down a bit overnight. One thing we'll look at is the Hang Seng, which continues to rebound very, very strongly. But let's start with those indices. Currently start with the Dow, currently trading at 39,091. As you can see, Friday session saw the index hit a record high at 39,287. So we are within, for the Dow, a whisker of a fresh record high. And certainly, I think there's plenty of people contemplating whether this index will hit 40,000 in the fullness of time. Certainly, I think it will over the course of time. It's just a question of whether we do get perhaps a pullback into March or beyond. But of course, as we've come towards the end of February, also a positive month for markets. January was a positive month for US stocks. And usually when you get January and February positive months, unsurprisingly, the rest of the year tends to be positive as well. So that does set us up, even with potential for maybe 3, 4, 5% pullback, still sets us up for a relatively strong year. So the Dow, as I say, just above 39,000, just holding on to its gains, really not able to get all the way back yet to those record highs from Friday, but it's merely a question of time at the moment. Certainly we're well up on where we were just a couple of weeks ago. From just before Valentine's Day, we were down at 38,000. We're now 1,000 points higher. This rally shows no sign of reversing. We haven't really had a decent pullback in this index since the end of November, the end of October, the beginning of November, really. At the best, it was sideways consolidation to the end of December and then late January, and then off we went up, off we go once again to the upside. So there's not really much more you can say that's firmly in an uptrend. There's very little sign of any downward movement at this point in time. For that to start to have an effect, you probably need to see it below last week's low, i.e. below 38,320, to really start to put some short-term pressure on this index. It is very much a similar story for the Nasdaq as well. We've seen this index obviously driven by these tech stocks. Just the Dow, of course, incorporated Amazon yesterday, so it's increasing its weighting towards tech stocks, even though Amazon is technically described as a consumer discretionary. We all know what it is really, of course. Nasdaq, again, slightly more two-way price action towards the end of December, but since then, really apart from a little bit of a shakeout in the middle of February around earnings, we still find ourselves again close to these record highs again from Friday's session, so above 18,000. Uptrend firmly intact, price above 50-day moving average, 50-day moving average still pointing higher, 100-day moving average pointing higher, 200-day moving average pointing higher. It's a classic uptrend and only very shallow pullbacks since November. And I think it's important to look at the way this price is trending. Yes, it seems to be, of course, looking at the chart, it's at the top right-hand corner. It looks as if we can't go any further, but there are plenty of people who argued it couldn't go any further during the course of January and into February. And yet here we are still within, 300 points of a new record high for the Nasdaq. And again, just as with the Dow, no sign of any downward move just yet. So still firmly a bullish view in place for this index as well. One that has been obviously going down over the past year or more has been the Hang Seng, but its rebound from the January lows continues. We touched in January, mid-January, the lowest level here since October of 2022. So a real, very impressive decline in the Hang Seng since its January 2023 peak. How far does it go? Now, at the moment, of course, it rebounded impressively from these January lows, up about 14% now from where we were. But it's still in a downtrend. Just as you can't really argue with the fact that the Dow and the Nasdaq are in uptrends, you can't really argue with the fact that the Hang Seng is still in a downtrend. You get impressive rebounds. This could go perhaps a little bit further. We're above the 100-day moving average for the first time since the middle of November, but that gave way to another big decline. At the moment, about 92% of the stocks in this index are above their 20-day moving average, so are seeing short-term strength. But we've seen that reading hit 92% or so several times over the past year or more. And each time it's been followed up with decline of the next 20 and 50 days. Now, at the moment, price action has yet to give us the signal that a new turn lower has begun. So for that to happen, reversal back below the 100-day moving average, back below, say, 16,400 would begin to suggest that it's hit a lower high. And maybe we do have the fresh leg lower that people perhaps are still expecting where the Hang Seng is concerned. Alternately, for it to solidify this bullish view and maybe suggest that it's at least hit a short to medium term bottom, you probably want to see it close back above the early January high, 17,175. If it gets back above there, back above the previous lower high, that at least puts the downtrend on pause for the time being, and might suggest that we've got perhaps a test of the 200-day moving average in the offing. We haven't touched the 200-day moving average since August, so it could yet return to that one. As ever with these markets, whether it's the Nasdaq and Dow going up or the Hang Seng still in a broader term downtrend, it's the dangerous thing is to try and call a turn in this market, whether it is the beginning of a broader Hang Seng rally here or whether it is a short-term pullback in the Dow as people still anticipate. There's no sign of that certainly happening yet, and there's certainly no sign that this longer-term downtrend has stopped, although it's a very impressive bounce. So it does put itself slightly more in the neutral category than it has done. But still a long way to go before I think we could safely say that, okay, this downtrend that has been in place now since January, and arguably, actually, if you go much further back into 2021 as well, that has yet to come to an end. If we're looking at FX markets, not much in the way of news flow. A few central bank speeches pepper the week, but nothing that's really expected to move markets too much. Though, of course, with the euro dollar, you've got US PCE data and then German and Eurozone inflation this week, which might provide a catalyst, because we've seen euro dollar rebound from where it was in mid-February, come back up from 107. Still stuck below the 50-day moving average, however, no sign that it's able to muster up a real sustained rebound above that. That's certainly putting a bit of pressure on the index at the moment, on the pair at the moment. If it gets back above the 50-day moving average, you could maybe be a bit more optimistic that we do have some upside in the offing here. And that might start to change things. Certainly, if we redraw this trend line, we have at least broken back above that. So that's one sign that maybe sends a message that we've seen a recovery of this broader move higher for euro dollar that started back in October. Otherwise, back below 108, maybe then test the trend line from above and become support. But you could still argue that it could turn into a lower high and then have a fresh push down towards 107. If, for example, that inflation data for the Eurozone is weaker than expected. For the pound as well, struggling to recoup the highs we saw in January. It hasn't really given up the ghost, I think, but it certainly has struggled to see much direction with not much in the way of heavy news flow either. I think we're still waiting. We had a UK CPI reading that maybe gave hope that we'd see an earlier move for the Bank of England, but that's not going to follow up by any comments from policymakers. The main barrier to further upside is, of course, this large one around 128 that is holding back any upside in the medium term. If it gets back to there, maybe we're worried to see whether it has the ability to push higher from here. Notably, though, on the downside, buyers have stepped in around this area, 125.50 or so. So that's sort of your block to further downside in the short term. If it does go back below there, go close below there, below 125, you could probably argue that the sellers have rediscovered the strength here. Certainly, if, for example, this week, if you get PCE data from the US that's stronger than expected, that could boost the dollar and could knock the pound against the dollar back below 125 over the course of time. It's Japan, where we do actually have some inflation data this morning, and that's once again put some pressure on dollar yen after a very impressive bounce from the end of December. We've seen dollar yen recover impressively as changing expectation of what the Fed might do this year. We came to the beginning of the year thinking the Fed would cut rates in March, or certainly some people did. I suspect it was too early. Now, obviously, March is off the table, really, and May is diminishing in likelihood as well. And the interesting thing is that if you look further in the second half of the year, of course, you've got the election, and cutting rates around election time is a very tricky thing, because while the Fed is officially independent, it wants to avoid giving the impression that it's helping the incumbent by cutting rates, trying to boost the economy. So in actual fact, the window for rate cuts this year could be much smaller than most people anticipated at the beginning of the year. Nonetheless, with Japanese inflation topping 2% in January, that's given dollar yen a bit of a knock to the downside. Remember, of course, we're looking at dollar against the yen rather than yen against the dollar. So that's why you've got this pair moving down slightly. Not really heading into full-blown pullback at this point, just topping out for the time being. We'll wait and see where this is consolidation that results in a move higher and a move back towards 151.90, 152, or whether that is finally it for this rally. We thought that was it at the end of January, and then it rebounded again. So there's a lot riding on this one. There's probably a lot of work to be done by the sellers to really drive this one lower. Looking at potential trendline support here as well. So if that breaks, that might add to the bearish impression. And then finally, commodity markets. Gold, talking of trend lines, it's back at trendline resistance from that December spike, and that held back progress at the end of January. It's also really held back the price over the past couple of days. But as we speak, it appears to be edging through that line, not with any great enthusiasm, it must be said. It's more drifting just above it as we speak. You could argue it's holding below it. You might argue actually to draw the trend line in a different place, which of course is the joy of trend lines really. But certainly this bounce here doesn't really cancel out the slightly negative view that's been in place for gold in the short term since December. That said, if you look at the longer term view, of course, big recovery from early October, and we have at least managed to hold above the 200-day moving average and more or less create higher lows since then. So the buyers just waiting to see whether we've got perhaps some strength to push on back towards the highs from the beginning of February of 2016. And again, not to sound like I'm repeating myself, but I am. It's about that US inflation data from PCE data, the Fed's preferred measure, that could perhaps provide the catalyst. If it does weaken the dollar, that should boost gold prices. And then finally to crude oil. Again, this has been quite a volatile one the last few days. It bounced once again for the beginning of February, testing trendline support, but that gave way to further buying. But it's just run out of steam again, really. We got back above the 200-day moving average, but we slipped inexorably below it. We dropped below on Friday. We tried to get back above it yesterday, didn't succeed, and then still below it so far this morning. And that's the problem, because not only have you got the late January high at 78.90 holding back progress, but you've also got this level or this area around 79.80 or $80 a barrel itself, which is where the spike higher in November and December ran out of steam. So there's a lot to be done here for the buyers. If you can get back above there, close above there, you might be a bit more optimistic this one has further to run, and you could more definitively, I think, shift into buying the dips rather than selling the rallies. At the moment, it finds itself probably at best in a neutral area, struggling around previous resistance, but having enjoyed a series of higher lows from the end of December. So a tough one for oil prices. And yes, it will be about the dollar this week. And if that weakens, that might give commodity prices a bit of a push higher in short term. So as we look ahead to the rest of the day, it's not exactly an action-packed economic calendar. It has to be said. Just a couple of speakers this afternoon from the Fed and the BOE. So that's one thing to bear in mind. Not too much else on the data front from Europe. We've also got US durable goods orders this afternoon and then US consumer confidence as well. So a couple of things that might give the Dow a little bit of movement as we go into the afternoon session, particularly as earnings season continues to calm down. Now, it's a bit of a lackluster session for the US yesterday. The Dow ending the day slightly lower. We're currently expecting it to start the day at 39,084. So that's just a bit better on where we were yesterday. So not really much of a clue where markets will go from here, but certainly a slightly quieter open expected on Wall Street this afternoon. That's it for me. Thank you for joining us, and we will see you again tomorrow at 10:30.